Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of more energy issues bedeviling Australia. But first, dairy prices are down, and down quite sharply. They're down 6.3% in today's auction, with whole milk powder prices down a startling 12.4%. The OECD is reporting that inflation in the group of 35 nations rose to 2.3% in January. That is up from 1.8% in December, and the highest rise since April 2012. Rising oil prices are said to be behind the shift up. The American trade deficit jumped to $48.5 billion, and near a 5-year high in January, as cell phones and oil prices helped push up the import bill, suggesting trade would again weigh on economic growth in the American economy. January exports were $192 billion, that's $1.1 billion more than December, and January imports were $241 billion, that's $5.3 billion more than December imports. When Americans import more, that powers world trade. Their trade deficit is now running at a bit less than 2.9% of GDP. By way of comparison, New Zealand ran a trade surplus for goods and services in the year to 2016 of $3.5 billion. The OECD is begrudgingly acknowledging that world trade is in good shape. Global economic growth is expected to pick up modestly next year to around 3.6% from a projected 3.3% this year. But they are highlighting the risks of rising protectionism, financial vulnerabilities, potential volatility from diverging interest rate paths, and these all hang over the trade outlook. Meanwhile, passenger travel is off to a strong start in 2017, with demand at levels not seen since 2011. Airlines claim this is supported by the upturn in the global economic cycle, as evidenced by their rising freight volumes. Even in the EU, growth is picking up, even if this news is overshadowed by European political squabbling. It is interesting to note the detail, which shows it is Eastern Europe posting the fastest improvements. And overnight, New Zealand and the EU have agreed to joint scoping for their proposed free trade agreement, a necessary step to a process that is actually moving quite fast now. It is not great everywhere, of course. Brazil's worst recession on record extended for a second consecutive year, dealing a blow to living standards and raising doubts about the pace of recovery for the once dynamic emerging economy. Brazil's GDP shrank 3.6% in 2016, following a contraction of 3.8% in 2015. They're in a tough spot. And as a follow-up today to yesterday's note on the stunning hikes in electricity prices in Australia, more stress is on the way from a shortage of national gas supplies. Producers are exporting it all, and there is a looming domestic shortage. In New York, the US Treasury 10-year yield is unchanged at 2.51%. Although there's been little movement in New Zealand wholesale swap rates, yesterday's small shift pushed the 2-10 curve to its steepest in over 3 years. Oil prices are unchanged today and just on $53 for the US benchmark, while the Brent benchmark is just on $56 a barrel. But gold prices are down, however, down $8 to $1,218 an ounce. And New Zealand dollar has fallen to 69.8 US cents. On the cross rates, we're down to 91.8 Aussie cents, and against the euro, just under 66 euro cents. The TWI is down to 75.5, and that is a 5-month low. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.